Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
The market's been sort of grappling with this obviously this concern of rising rates, whatever the reasons may be, that's something obviously equities are going to have trouble with in general. And so we've seen this move back into the mag stocks. We can see this contribution being very, very concentrated in sort of the balance sheet heroes that we talk about, some of the higher quality names, and the rest of the market's really been struggling. So I think this was a bit of a sigh of relief of sorts for markets that were starting to even worry. We're starting to hear that talk that, maybe we'll get a rate hike at some point. And I think that started to make people a little bit nervous because the market wants its punch bowl nice and spiked. And that is the complete opposite, right? That is like being the designated driver suddenly. When you get rate hikes, you are the designated driver. No, nobody wants to be the designated driver, right?
Oh, no. I am the mom in the friends group. That's me.
Okay. So, I think, as I always say, the market's male. It can focus on one thing. And so it sort of had these blinders on thinking, oh my goodness, what's happened since August here? We've gone from, we're going to get these rate cuts and we're going to have a big giant party in 2025 to whoops-a-daisy. Powell doesn't really know what the heck he's doing. That's kind of becoming clear. And so, we're back in this sort of nervous Nelly type environment here. And I think you were starting to see quite, so almost max bearishness a little bit. I mean, of course, things could get worse than they did over the last week, but you're starting to see real bearishness out there. Here's some Goldman data versus, bulls to the plus side here, bears in control to the downside over here. We start to see a real kind of deterioration of that bullishness. And of course, it's a bit like one of those contrarian things. As traders, we watch these sorts of things as, when things are a little too bulled up, this Goldman Sachs sentiment indicator way up here in November and December, and it just kind of faded throughout the rest of the year. And in January, really kind of dropped down below the 1.0 level, which is, sort of the extra stretched positioning, right? It could get a little bit less bullish, of course. And we started to see some heavy shorting of from hedge funds. I've been reading about that lately, and I just came across this chart today, which sort of shows you this sort of excluding index products. Hedge funds in particular really starting to short out there. And I think you just got this sort of reflexive bounce today. We needed a reason to kind of bounce up. And as we talk about, we always like to talk a little bit about the gamma environment. So if you look at that gamma environment, which hopefully the listeners are starting to get used to a little bit, us throwing out these crazy terms like gamma positioning and accelerants and decelerants. Well, we're sort of anywhere below 59.75. We're in this very red area. And all you really need to know is red means caution. It means the potential accelerant of movement. And so gamma doesn't cause problems on its own. But if you get a reason to sort of start that snowball down the hill, what the negative gamma environment will do is it will tend to accelerate that. Because, if a dealer is short a bunch of out of the money puts, it's getting dinged twice. It's getting hurt because of delta. These things are starting to pick up delta. It has to sell into that sell-off. So you're exacerbating the move because you have big entities actually having to sell into a sell-off. Plus the implied volatility is rising. And that's where Vanna actually comes into play, which is that next crazy derivative that you don't hear much about, Greek that you don't hear much about. That must have been
triggered big time today.
That triggers well. And it does trigger the other way as well and so this accelerant is very much a fixture of markets for us these days. Structurally, the dealers tend to be short out of the money puts because people buy them to hedge. And the JPM caller trade's an example. What does it do? It sells calls and it buys downside put spreads. So dealers tend to be short puts and they tend to be long a whole bunch of calls up here. So the Vanna, all these Greek effects tend to push things around a little bit. To the upside, Vanna can actually have people it can have the dealers sort of step back a little. The deltas drop, and without getting too deep into it, the market can basically get into this environment where the movement to the upside gets exacerbated. So today helped, but it doesn't entirely fix things. And from the dealer's perspective that we talk about, we're still sort of in an iffy area. And you and I have talked about the VIX beta to the S&P, still very, very high, 98th percentile of VIX futures to the S&P selling off. So it's very reactive still, very nervous. VIX dealer gamma imbalance. So there's gamma exists in all things, not just index and stocks, but in the VIX world. And you can see that VIX dealers are very short exposure in upside in VIX. So that makes them very nervous. So that probably keeps us in a world where there is some nervousness out there that could start to unravel. It wouldn't take a whole lot. And if we look at VIX ETNs, right, the leveraged ETNs, you can see that we're 82nd percentile in AUM. And so we often talk about sort of listed gamma, where, you know, option positions, open interest, whatever's going on in listed markets. But there's this whole synthetic gamma world of levered ETNs and ETFs and inverse ones that contributes as well to sort of selling into sell-offs and buying into rallies. So it exacerbates the moves that we're starting to get used to. Now, I want to play a little game of good thing, bad, positive, and negative. So here we can see that the reaction of the VIX to the S&P sell-offs has been more muted as we've gone along since August 5th. So we can see these lower highs, and all this is saying is that the VIX is getting less nervous. It's less and less the cat in the room full of rocking chairs. And today probably brought us down into here, right? So we're probably down into to this sort of area here. What I wouldn't want to see is a VIX very reactive again that gets us above this trend line. And I think you can draw trend lines of practically anything.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.